Hello, everybody. Today was another edition of a low volume stock market rally. What's even more comical to me is that volume on the NASDAQ was lower than any of the previous sessions. Normally, you don't come back from a holiday extended weekend and then have lower volume than you did before the pre holiday. But that is exactly what we had on the NASDAQ and New York Stock Exchange today. And all I got to say is after 5 up days, the amount of buy the dippers that are getting pretty loud on some of the Facebook message, not message boards, what do they call groups that I try to watch for sentiment. It appears like a lot of the buy the effing dippers are going pretty hardcore on all the outspoken bears. I will never be an outspoken bear. I'm just a messenger trying to warn everybody about all the problems that are lined up in this market. If you did not see my big wave trading portfolio update and top current holdings post this weekend, I recommend you go back and read that because there are some important items in there that everybody needs to be aware about. And that was before Henry Blodgett posted his charts today with the price earnings ratios being the highest it's been this century outside of 1929 and the year 2000. So more and more and more evidence that this market's way too expensive, and the internals are clearly indicating something's wrong. Sentiment's completely not right, and fear is nowhere to be found. Sorry, after 6 years of this, I just can't buy it anymore. I'm going to have a real follow through day on real volume before I'm even anywhere interested in this market. Therefore, I'm not taking off any of my hedges. I'm not taking any of them off. All my ETF hedges, keeping them, and the small put positions I have in my margin account, keeping them. And that's just that. I plan on, after these 5 days of no volume uptrend, it can probably do this a few more days as far as I'm concerned. I welcome it. Get it back to the 50-day moving average, hammer this thing again, and if that's the case, we're pushing heavy. We'll at least be putting 5% in all five, I believe, of my 3 times ETF positions, and I'll add to my put contracts. For today, though, only one sell. Corn, just insane intraday session for this ETF. The huge reversal, keeping it above the 50 and 200-day moving average, will prevent it from being a full sell, but I got to get out another half of this. If it closes below the 20 or the 50-day moving average and or closes below the 33.46 level, 33.46 is my final line in the sand, which lines up pretty well with that uptrending 50-day moving average and the downtrending 200-day moving average, and corn is completely gone. Um, it is what it is. There's still inflation out there, but some of these things like gold and silver aren't really indicating it as much as some of the agriculture ETFs are. Corn could still easily rally here with that big intraday reversal, but still, I want to get out of half of it, not a full sell once again, because it's holding above my ultimate lows, my final cut loss lows, 33.46. One new long position today. Here are some of the other ones I was thinking of. SWKS. Arithmetic chart shows you that the base isn't nearly long enough for even anything I want to buy. So SWKS was one of them. Actually, hold on. I thought I could memorize all of this, but it looks like I'm going to need my notes. So let me grab my notes over here on that desk. And here we go. And then some of the other ones I was interested in. GSAT. You can also see that that one, once again, too short of a base that it's attempting to come out of. I need more sideways work. AFOP is on my radar screen. Earnings are coming up on the 24th, so that is definitely a no-go. LXK also producing a pocket pivot point signal. Base is too short to really go long, and earnings are tomorrow. So once again, LXK, just like SWKS, is no good. SGMA is putting in a nice move, pocket pivot. This stock was recently added to the AAII shadow stock portfolio. This portfolio well outperforms the market over any span, 1, 3, 5, 10-year periods of time. This thing has an excellent track record. However, these are super thin stocks, and they're meant to be bought and held for long periods of time. Not my methodology. I'll still trade them. And the fact that SGMA is moving, and I know that it's in that portfolio, makes it interesting. But once again, this base, too short, not interested in it. Moving on. Also, Watt is an IPO breaking out above the 10-day moving average and also breaking above the trend line connecting the recent lows. I like this stock, but once again, in this market, being up 9% in one day, I don't know. It's too deep of a base. If you look, yeah, it could go higher. AKBA did, and I missed out on that. But you know, this tape is just wrong. If we had the market rallying the past 5 days on well above average volume off of this recent pullback, that would be an excellent indicator that we have seen the lows. This well below average volume is just more bullshit QE trading that I'm just not into. So Watt, if it decides to run here, it's going to go without me. I just wanted to bring it up to everybody in case you want to get long it. And then the last one I'm passing on is FR. Nice pocket pivot point signal right off the 50-day moving average. I would like to get long this one, but I think it still might be a little early. I'd like to wait for a real breakout, as to me it's still really just consolidating the recent gains. So maybe a couple pocket pivot points here, and then another one would be good. And as you can see, there hasn't been one pocket pivot point sell signal since in March, and it's triggered 2 buys, so that's always good. The new long I'm going long, IMO. And I've been doing this recently. Whenever I get a flurry of pocket pivot point buy signals, I've been wanting to make sure that I don't get any pocket pivot point sell signals. So if you look here, you can see that there are no pocket pivot point sell signals since the February lows. Yet we have 1, 2, 3, 4, 5 pocket pivot point buy signals. So we're starting to break out of this tight trading range. It appears to be forming a pennant flag pattern right now, and it's getting really tight trading, low volume in that recent consolidation, and now it's starting to break out with the pocket pivot point signal and decent volume. It's not the best of the best, stocks out there. It's an Amex stock, but it is in the energy sector, and obviously these are our leaders in all of our market internals. TSV, MACD, BOP, Relative Strength Line are all trending in the right direction, so it makes it a better purchase than other stocks out there in today's scan. And might as well, because who knows if we can go up a few more days on no volume, and if that's the case, this is a leader, so it should do well. All right, that's it for tonight. Have a great Tuesday, everyone.